Welcome, ladies and gentlemen, to yet another issue of the Grey Market Talk with my magnificent guest, like one of the Magnificent Seven. Now it's just the Magnificent Two. Nic I, former bond market vigilante, market maker at all the big names in the industry. And before he retired, he was managing 60, 70 billion euros assets under management. I think I've got the number right now, Nic.
You're getting closer. That's really good.
And with me, your trusted former market maker, Thorsten Wegener, who is retired now and is having pleasure and joy in teaching the occasional lesson or class about options trading and everything that's surrounding it. And whenever I'm interested in what markets do and what really moves them, I'm going to my fallback guy, Nic, who is going to explain these things to me. Today, I've prepared a couple of slides. We're trying not to make it too long, but they're actually quite interesting. That's why I call them my quite interesting slide. And I'm diving right into it with a disclaimer this time. Because we're in Germany now and things are changing in Germany, I want to refer to Article 5 of our Constitution, which says, jeder hat das Recht, seine Meinung in Wort, Schrift und Bild frei zu äußern und zu verbreiten. Translating that, freedom of speech in a German way. I'm pretty sure there's somewhere everything else is being organized by a government law. We have that in Article 14, which is property rights. Yeah? It says everybody has a right to its own property, and then there's a little asterisk in the German Constitution until we say otherwise. So, okay, fine. I put that in here. I have not Germany on my rooster today, but just as a little side information, we heard everybody has Bosch or has heard the name Bosch, right? Whether you live in England, in America, in France, or all over the world for household goods. How do you call these? White goods in the UK? Is that the right word, Nic?
Yeah, you call them
washing machines, dishwashers and stuff.
Yeah. I mean, yeah, white goods.
They're just laying off 3,000 people, like so many other companies in Germany, but apparently we are not in a recession. Yeah. If I've ever seen one coming down the road, that's what we're having. And from March on, energy prices are moving up again. I just got a letter by my utility company because the special VAT rate they pulled out after the war in Ukraine went down from 19 to 7%. Now it's going back to 19%. While at the same time, the United States, which was our biggest supplier of liquid gas, Mr. Biden just said we touched that last week, right? No. It's not good for the environment, dear Germans. We are not delivering it anymore.
Yeah, but although that's not quite why he's doing it.
Why is he doing it, Nic?
On the one side, he is trying to please his kind of green lobby to say that, look, we're not selling this stuff outside. But at the same time, if you think about it, he's keeping the supply of this sort of core resource for American industry within America, which means the prices in America for this stuff continue to drop. And when energy prices continue to drop and are in abundance, then all of these industrial companies that there are in America are just free not to worry about what is normally a very expensive part of their profit and loss statement. So he's actually sort of helping his industry as well. At the same time, he's kind of screwing the Europeans because he's saying to them, don't buy from Russia. And by the way, you can't get it all from us anymore anyway. So, he is trying to sort of do two things, and it's always thinking about America.
Couldn't you also approach it from a more nefarious approach and say, another industry he can kill off in the United States? Yeah? If these guys can't produce fracking gas anymore, fine, you've destroyed the fracking industry just before Trump gets in, and it will take an eternity before they're opening up their production facilities again.
I think that would be, suicide for the economy.
I've seen
and also for the global economy.
Yeah, do they care, Nic? Do they care at the moment?
Well, I think they care about their own economy, and therefore they will only do things that are good for themselves. And in this respect, I don't think they want to kill the fracking industry. That's why it continues to pump, and that's why price is not allowed to go so low that it's not economically viable then to take stuff out the ground. You have to remember that the US is the swing supplier for oil around the world. So when growth picks up, where does that supply tend to come from? It comes from America. You don't get it from the OPEC suppliers, and therefore it's very important that that this stuff continues to pump out of America. And when push comes to shove, they will stop the export of this stuff to the Europeans and use it for themselves. And in a way, this is a problem for Germany and is for Europe. Is not a problem for the Americans. America is in a wonderful, wonderful position right now.
Well, we've seen beautiful pictures of our finance minister and our vice chancellor, Mr. Habeck, being best mates again the other week. So they're really going for it now. And Mr. Lindner, our finance minister, is posting beautiful lines on LinkedIn like, oh yeah, we have too much bureaucracy and the taxes are too high and energy prices are too high. And you think, gosh, if you only would be in government. No, wait a second. You are. What are you guys doing? Yeah. So I don't get it anymore, Nick. But we used to be in Germany masters of, I've been in a new meme here, science. Yeah. It's a beautiful picture how two forks are being balanced on the edge of a glass with a coin. And in Germany, you used to very good in the picture underneath, engineering, which is simply some duct tape plugging them next to on the glass and keeping it in balance. And that's what we used to be good in Germany. But if every input costs are going up and the bureaucracy makes life very, very difficult, how long can you sustain this approach of doing business? Yeah, we don't have much resources in Germany. The only resource we always had was our educational system, and people are being able to engineer stuff and doing that quite well, so that our products were being thought after in the rest of the world. If that goes out of the window, they're going to produce these things in China, in India, in the United States, in other countries which have educated people, but not the same input costs or bureaucracy we have. There's a fantastic picture I stripped off Macrobond. They posted it out on LinkedIn. Obviously, want to have subscribers for their product, which I think is worth having a look in. As I'm not a subscriber yet, I simply took the LinkedIn pictures and increased it a little bit in size. What is probably most interesting here is simply it starts on the left in 20. I have to even increase my screen. In February 22, and it moves to the first quarter of 24 now. And you see we're progressing from green into red. Yeah? And financial market conditions are not good. The 10 to 20 year spread is in the red. Inflation, core CPI is still in the red. Consumer leading indicators are looking horrible. Economic growth is looking horrible, even on the official numbers they're giving us. Well, the next question would be, how bad is it in reality? So I'm still of the opinion we are driving the Titanic right through the iceberg and into the next one here in Germany. And what we started off with, the situation with our input costs, liquid gas, we are just being played with at the moment. Did you see the interview with between Tucker Carlson and President Putin?
No, I didn't. I didn't. I heard enough about it.
It was boring, actually. A history lesson from Mr. Putin. Okay, fine. There was one question that made me snicker a bit. It was Tucker Carlson asked him, so who blew up the Nord Stream 2 pipeline? And Putin's response was, I think it was you, Tucker. So Tucker denied it and said, no, he had an alibi for it. But even Putin didn't go into who did it. What I found quite interesting is where the original narrative was, it must have been the Russians, these idiots. Yeah, they blew it up themselves to make things more difficult for everybody. Nobody's discussing that anymore. Everybody knows now it wasn't the Russians. So who was it? Who knows about it? And why is that being kept under lock? Yeah, I think it's one very, very important point in geopolitics. Who blew this sucker up? Was it the Americans? Was it your guys, the Brits? Was my theory. The British have the Navy to do it. They had a Ukrainian special forces team in there. They collaborated. The Brits helped them and sorted things out that way. I don't think it was the Americans. I don't think it could have been the Ukrainians on their own. It makes no sense at all that the Russians have been it. What makes sense that we in Germany know who did it. And then it gets really difficult. Because if it was the Ukrainians with the help of the Brits, should we declare war on both of you guys, Nick? Because it's an act of war.
This whole, you're absolutely right. Everybody in the know knows who did this thing, and yet everybody is behaving as if
it's because they should stop
people who
this
did
bloody
it.
war over there. Yeah, they're putting young men through the meat grinder in something that can't be won by any side, by the two countries which were in the pre-war OECD study the most two corrupt countries in the whole of Europe. Yeah? There was Russia, and then there was Ukraine.
Yeah,
Wow.
well, I think the one thing that I took away from this interview was that there was a peace deal a year ago or year into the thing before Boris Johnson put the kibers on the peace deal and said no, there will be no peace deal. What he has to do with this thing, I have no idea.
Well, he wanted to channel his inner Churchill, right? The moron.
Yeah. Yeah, I mean, but I think all of these warmongers, will, fortunately, Boris is no longer in power, even though the rumors in the UK are they're going to bring him back to try and
to do what, Nick?
Behind the sorry,
to do what?
The rumor is that it's not just David Cameron, former Prime Minister, who's going to be back in the Conservative Party in the cabinet, but Boris might make a sneak reappearance just before the election, just to rally the troops and say, look, we've got the dream team. But I have to say, the history shows, people like this, they've screwed up. They should be kept well away from politics.
Which is extraordinary. Honestly, if they bring Boris back, they had David Cameron already as Lord Cameron now, yeah? They had to make
that was to fix the problem that he wasn't an MP.
And now Boris doing what? Becoming chancellor? The guy doesn't read his briefing papers. We all know that. Yes.
Boris wouldn't want to be chancellor. He'd probably want to be sort of foreign minister and go and mess up the rest of the world.
So it's like a job lot. Cameron would pass it on then to Boris so he can fuck it up a little bit more.
The reality is the Conservatives stand, it's one of your probability things. This is less than 15% delta. How's that? So
I would go out 2 standard deviations. That's a 5 delta. Or 2.5. We're only looking at one side of the distribution. Yeah.
2 standard deviation, 3 standard deviation, 4.
Yeah, well, what's the new saying in Germany? Things have to get worse before they get worse.
Well, yeah, I mean, it is certainly worse. And as you can see from this thing, this chart that you've got, which actually sort of tells a lot, and it's coincidental or not coincidental, but this is the time when the sanctions were against Russia, which Russian economy would all be green, right? If you had one of these for Russia, it would be the other way around.
Yep.
And the sanctions on the Russians have only hit, it's backfired on Germany, it's backfired on many European countries. They are in such a very, very poor state here, and they've got nothing. And, your opening line, Bosch losing 3,000 people, on top of all of these geopolitical errors that they're making, they're also making errors in trying to interfere in how industry should be run and forcing industry in Germany to transition at a pace much too fast for what these companies can and should be doing. And even before the consumer is ready to evolve, and people aren't ready to buy EV cars or such.
If you think you could make a comparison there, we are in Germany are responsible for 1% of global warming, or they've changed the name to climate change. 1% of our output in CO2, but we spend an enormous amount of money to get carbon neutral, to reduce that even further. And everybody says, oh yeah, that's the right thing to do. We have to save the planet. If you would put that into the health sector and say, you know what, we can come up with a treatment to extend the life of a 95-year-old another year, but it would cost you an additional $2,000 a month in health insurance premiums. Would you say that's all right? And everybody would just say, are you fucking insane? Of course it's not all right. But that's what we're doing right now here on the energy sector. I don't get it anymore. I think it's really, we see it here on the charts. The economy is not looking good, especially when people are being fired left, right, and center. Eventually it will arrive in the population. And I had this conversation with a couple of mates earlier. And I said, somebody said, why are the Germans not going out for revolution? I said, that's not what we're doing. We always take stoically what our leaders give us until you reach the breaking point and you end up with something far worse than what you were all looking for. And that is always the German way. We go with it, we go with it, we go with it. And then we vote for some complete idiot who is promising solutions to the mess the other guys have made. So don't trust the Germans. My advice on this podcast. Heard it here first.
Yeah, on that point, I mean, it's a personal view because, I have to say all of this stuff is a personal view. The personal view is that this whole amount of money that's being spent on this energy transition far exceeds any benefits that you're likely to actually see, certainly in your lifetime or your children's lifetime. And, as you say, the money is better spent elsewhere. And there is a very, very good book called False Alarm. Anyone who's interested in looking at the pros and cons of that, read that book.
I'll have a look into it. Brings us needlessly to not needless, but wow, I'm looking for the right English word. Let's simply transition to one of the fantastic memes I found. I've seen it variations. Let's go to China. Lighten up the mood a little bit. For everybody who's just listening, you see a picture of the sun and the curvature of space, a neutron star curving it a little bit more, a black hole already as the heaviest element in the world, curving it to an unbelievable degree, and then you see the Chinese stock market. Chinese stock market, I have this slide in later, is now worth accumulated as much as Nvidia in market cap. It's just
Clearly
very
sensible trade.
A very interesting situation. And just because we talked on this podcast half a year ago already about a balance sheet recession, and that Richard Koo, let's call him inventor or discoverer of the balance sheet recession, he was, I mentioned that extensively, he was in an interview and said, yes, he's at the moment left, right, and center hired by Chinese officials to explain that to them. What is happening in China at the moment? Obviously, they're being dragged down through the Evergrande and the whole real estate bubble going up over there. But the word balance sheet recession, I think all of our viewers, our students would be interested again. What actually is a balance sheet recession? We spoke about it, but I thought I'll go to the man who is deeper into economics than I am. Nic, can you, in a couple of brief words, explain to our listeners what a balance sheet recession actually means? Especially the Japanese had it for years.
Okay, what I can't do is explain this chart because I haven't seen it before, but the bottom line on the balance sheet recession is basically one which is caused by people preferring to repay debt rather than to borrow money. So when the Japanese were reducing their interest rates to try and stimulate the economy, corporates in Japan, instead of using quote unquote cheap money, we have to put that aside, what cheap money really means, but quote unquote cheap money, why don't you just borrow money and try and grow? Or what they did was say, well, the money that we're earning, we're just going to repay debt. We're not going to borrow any more money. We don't care that interest rates are 0 or 1% or very, very low. We just want to repay debt because they were highly, highly leveraged, and their whole sort of their own balance sheet was just far too much debt. And so they decided that they would repay debt rather than expand their balance sheet, even though money was cheap.
And then you end up in the worst scenario for every economist, deflation, right?
Yeah, I mean, that you could say, imagine now with the US with an incredibly awful balance sheet with deficits going out at 2 trillion a year or thereabouts. And then tomorrow morning they say, you know what? We're not going to borrow any more money. We're just going to repay debt. Be careful what you wish for, because yes, you're going to get your balance sheet down, but you will cause a recession. And the Japanese chose that path, in the sort of early 2000s or whenever it was. And the Americans clearly don't. But the Americans have that luxury. Nobody else does.
put a next picture on China, a mixed picture against from Macrobond. Users access the chart here. I'm not a user, as I said, but hey, worth having a look. And if we can plug them for providing these great charts of LinkedIn, that's what I'm going to do. It's a mixed picture in there. One of the lines that stands out is consumer confidence. Present situation. It's one of the bottom lines going right through the red line here in the chart.
Absolutely.
And
this is a real problem.
That is the biggest problem they have in China right now, isn't it?
Well, it is a consequence of some other things that are going on, and the consequence of the fact that their real estate market is just, there is, your black hole comparison thing is more attuned to the real estate market in Japan rather than the Chinese economy. The real estate market is dragging everything down. The Chinese authorities have done their best to kind of fill up the hole with, with money, but the hole is just too big. And they're trying to reduce interest rates. They're trying to show the people that, look, we're doing everything we can, but it is just not enough. And so the effect of that is that saving in China is just increasing. So they don't want to see people saving more money. They want to see people spending. So that just means that they need to do two things. A, throw more money at the system, buying all of this bad debt, taking it off the books of banks and these real estate companies, or the individuals who are just too long of bad stuff, or they'll devalue their currency. So A or B, they'll have to continue this path until they turn it around. And let's not forget, in 2008, 2007, the Americans had a big real estate thing, which kind of triggered a global financial crisis. And, the Chinese have got their own mini global financial crisis and they have to fix it.
That reminds me of a story in 2009, after I retired. I used all my air miles and visit my friend Adi, with whom I spoke yesterday, who sits in Dubai. Different story. Anyway, I was invited to his wedding in Brunei, in Bandar Seri Begawan, which is the capital city. I never heard of it before, but obviously. So I had to fly through Hong Kong and then take a local line. And I used my air miles. And for the first time in my life, I flew first class from Frankfurt. And I went on the aeroplane and sat down, had a nice chat with the stewardesses and the gentleman next to me. And then suddenly everybody disappeared and they came back in their pajamas, which were handed out. Yeah, Lufthansa pajamas made by Marks and Spencers, for all places. Okay, fine. After this flight, I could have become a partner in a very lucrative real estate company in Hong Kong. From the gentleman who was sitting next to me, telling me all about what you could do, leverage the property sector, especially private individuals. I didn't do it at the time because, hey, it's not my market. I don't know anything about it. But that was one of the peak moments where you realize, yeah, everybody had their fingers in it and everybody was getting rich, and normal Chinese people became multimillionaires by being invested in private properties, not real estate commercial stuff, but private properties, because everybody was buying it. And that is now playing out on the other side. The question I'm asking myself, how far can that go? How much are private individuals now feeling this balance sheet recession over in China?
Well, on that property thing, and I'm not an expert in any way on China, but when you do something too much, too fast, before the economy adjusts. So all of these people who are working outside of main cities have to eventually come, and there is this whole urbanization thing. The pace of urbanization has to match the development of properties, yeah. And when you just get this imbalance of just building of real estate, but not enough people coming in to actually take advantage of that real estate in that size at that speed, then you've got this imbalance, and therefore you somehow need to bridge this gap for everybody. And that's what the Chinese authorities ultimately, in my view, have to do in order to kind of fix this problem. But don't know is the answer to that. I think if you look at cycles, so there is the Foundation of Study of Cycles recently put out a bit of research to say that there is a cycle low expected in the Hong Kong and Chinese markets. So we'll see whether or not this is the low.
Well, you're going to tell me when we've actually reached the low, because if something is completely bombed out, that's always when my old trader heart starts getting excited. When nobody wants something, but is it too early? I don't know. I can't really say.
We spoke about this either the last video of last year or the first video of this year. You said, what is it? What's the thing that worries you the most, apart from the Russian thing? And I think the one before that, I said, well, the market that's been bombed out the most is Hong Kong. So that's the one where you want to look for value, because ultimately that's going to be the one that's going to, bounce the most. And you saw this week, China rallied 5%. Hong Kong was still not quite there. But, what do you want to do? Do you want to buy a market which is, as a whole, worth the entire of one company, NVIDIA? At the moment, NVIDIA's got momentum. China's got momentum the wrong way, but you clearly think that ultimately the upside has got to be in the Asian markets and not necessarily in some of these stocks that are just sort of hot stocks.
You've given me a fantastic segue to the next point, which probably, well, yeah, absolutely. That is the object of our desire. I put in a lovely chart from Hedgeye, the best charts in the industry. You see a bull and a bear, and you see the bull putting all his chips on the table and say, I'm putting it all on rate cut. So yeah, that's the situation we have in the United States at the moment. And then I came across another chart, which I thought was actually quite interesting. Somebody's put up a chart and said, if we go to the beginning of the rate hike cycle in the United States and look at the S&P performance, then we have now, after we can assume the rate hikes are over, the S&P is 15% higher than it was in March 22, before this whole we're not even thinking about increasing rates thing started. So looking at this
you've
chart,
you got me going now on this one. I mean, damn right. For a long time, and even before we did our videos, I did wrote this thing on LinkedIn about the fool in the shower, referring to the central banker who was just turning this thing and nothing was happening. This dial. It was just cold water and he's just turning it and nothing's happening. And then suddenly hot water pours out. And that's the fool in the shower analogy. And one of our early videos, I said, it's nothing to do with interest rates. Absolutely nothing to do with interest rates. Inflation will fall without interest rates. And look at this. This is the thing that basically the Fed should either resign immediately. Central bankers should look at this thing and say, shoot, we said at the beginning, it's going to be painful. There are going to be sort of thousands of people on the streets. It's going to cause so much pain. And then, of course, all of the YouTube guys came out with there's a recession, worst since 29, and all of this stuff forced people out of the market, at a time that before the market started to take off. And 525 basis points later, according to your chart, the stock market is higher, A, and B, it looks like it's kind of unstoppable. And at the time where we think that they have peaked in their rate hikes, we're actually saying it might actually be the top. So go figure.
I've nicked a couple of interesting charts from the good people of Game of Trades, which I'm going to show in a minute. But the last Macrobond chart, because the pondering of a soft landing is obviously the reason why we're seeing that now. We see the narrative goes, yes, interest rates will come down. The economy is in good shape. We see it in the official employment figures. There's no panic going to happen. The Fed is more political than everybody assumes, which I never thought that they're not political. Yes. And we have an election in the United States coming. So, yeah, let's open the faucet and go long till we are blind. One of my treasured podcasts I'm listening to, Macro Voices, he on the air said in his last Pete Townsend that he actually dissolved his S&P hedges. Reluctantly, but that's what he did, because he thinks, well, we've seen new all-time highs. The market seems to really be coming in on that soft landing. Then Macro 42, Darius Dale also said, yeah, we are still in everything's fine. And at the moment, the data points into the direction of soft landing. So no point in taking your chips off the table. What do you say to that, Nick?
Well, Okay, so I have also been forecasting. You remember last year when we were
Yeah.
at 4,100 and I said, 4,800, 900, somewhere there or thereabouts. So I am looking for a point where the market does reverse for a few months. So I was in the camp of probably the first quarter, first half, not so brilliant. Second half, fantastic. So I still see 5,500 to 6,000 as the S&P, but I really was one, and I still sort of maintain that the first quarter, first half won't be so good. So I'm looking for more choppy. We may see a little bit more, but I still see a 4,000 handle somewhere in the next few months. Down towards 4,500. I see that. But on the other hand, why do I still see sort of 5,500 to 6,000 on the S&P? Because what is driving growth and what the Americans can do that no other country in the world can do, absolutely no other country in the world can do, is that they can have an unfunded budget deficit and continue to just flood their economy with government debt. And they go and buy this, they go and buy some bombs, they go and buy, some shelter, they go and buy some, installed factory. One day they'll improve their infrastructure. They will spend this money without any funding behind it whatsoever. We know that the Brits tried to do that and they got absolutely mullered. The government fell because of this, theoretically. But the Americans will continue and can continue to print until one day somebody says you can't do that anymore. And we don't know when that day is, but it is clear in a Congressional Budget Office issued in the last few days. I don't know exactly when. I just was looking at it before you came on the line. The CBO just put their next 10-year forecasts out. So it's as bad as it was. They've updated their numbers for GDP. They've updated their numbers for their interest rate assumptions and unemployment assumptions and growth over the next 10 years. I mean, this debt number just continues to grow. And whilst the Americans can continue to put money in unfunded, effectively, then their economy will continue to avoid recession. So, they are very lucky. That's why I say they are in an unbelievably unique position in the world to do that.
I just put up a chart of the Wall Street Journal, actually, the Fed call as of last week by all the major banks. And if you look, most of them are now forecasting the first cut in May. March seems to be off the table. We'll go mostly into June, but the lowest cuts in 24 are seen by Oxford Economics and by Bank of America at only 75 basis points. And the highest are being by Jefferies and UBS, who assume 225, respectively 250 basis points. They will need these cuts if they keep on spending like a drunken sailor, Nick.
In the CBO's projections, if I recall correctly, they are assuming that interest rates this year and next year average 4.6%, or the 10-year yield is 4.6%. As for their rate cut, I could probably sort of look at it whilst you're on air, but I can't remember what their rate cut forecast is. But we just said 10 minutes ago, interest rates don't matter. Last week was the time when the forecast of 6 interest rate cuts moved to 4 interest rate cuts, and the S&P went up 100 points. So this is not driving the S&P right now. What's driving the S&P, in my view, for this last little bit, I went to a conference in the first week of January from one of the global rating agencies. They're from the States. They came over and they made their economic forecasts, and they basically, and I was actually shocked. They basically said, well, we forecasted a recession for last year, but in December we changed our mind. So we are now telling our clients that they can go and buy risk assets. So the whole of 2023, a global organization, it's not just the YouTubers, were also forecasting a recession. So you think these institutions, the people who have been told and believing in recession for 2023, who were wrong, are now coming into the market and they've got no cover anymore. They're forced. In the old days, they didn't have to buy stocks because their advisors were saying, no, it's okay, you don't need to buy it. But now the advisors are saying, no recession, you're going to be fine. Just go and buy. So all of these buy orders are coming through it must be in some size. And as I say, at the moment, the Treasury market could go up 50 basis points. Nobody cares.
Yeah, it's amazing. I'm coming back to one of the books I also have in my reading list for my students by Robert Schiller, Narrative Economics. He was one of the first academics who actually pointed out and said, scan YouTube, scan Google. What are they all saying? What is the paper? What are the papers writing about? And Game of Trades last week had a lovely show where I got these charts from. And this was a number of news stories with soft landing at an all-time high. So that is, if you scour the dark belly of the internet, everybody is writing now about soft landing in the US economy in there. At the same time, we discussed that last week and already before last year, when Jeffrey Gundlach came out and said we have official unemployment figures, which are looking quite well. Nothing to see here. Move along. And then we have the household numbers when we're going from state to state, and unemployment, which is usually the last before an economy turns, don't look so good anymore. And this chart I have here on as well is share of population with higher unemployment than 12 months ago. So what is it now? We discussed it last week, so I don't have to repeat myself. But this is also one of the troubling points where I think, okay, what are we seeing here? We're seeing the narrative. Everybody's talking about soft landing. You just said so rightly, nobody cares what interest rates doing. Interest rates are going up 50 basis points. Yeah, market is still rallying.
They went up 525 basis points, which is nobody cares.
Yep. Doesn't bother us at all. And
because the economy is growing. That's why nobody cares. And the economy is growing because the government are there with a 1.6 trillion or 1.7 trillion every year putting money into the system. They, and you think about it over, 2 years, that's 3.5 trillion. 4 years, it's about 8 trillion or 7 trillion. This is an awful lot of money that is going into the economy. And that makes a huge difference. No other economy in the world can do this. The Germans are talking about 60 billion where they can't get their head around whether they can spend it or not spend it. And these guys are spending 1.5 trillion. Do me a favor. This is a different world. So unemployment, so let's just talk about it. Unemployment, yeah, if there's anything that would concern me, it would be the unemployment thing. I'm looking always at Jeffrey Gundlach's sort of unemployment thing and moving average thing that he has, but unemployment is still 3.7. The Congressional Budget Office assume it's going to go to 4.2. Okay, it's going to go to 4.2. They also assume that growth will gradually head down to the sort of, I think, 1.8 real GDP over time. But for now, the Atlanta Fed, the GDP now is something like 3.3% for the first quarter. I mean, this economy is just on, it's just got a rocket behind it.
So we have
that's the most important thing.
Sorry, we have this situation again that reminds me, because I've heard that line as well last week. Party like it's 1999. Interest rates don't matter. Unemployment doesn't matter. All these things don't matter until they suddenly start mattering a lot.
I agree.
See new all-time highs. Fantastic. Everybody has learned over the last 20 years, buy new all-time highs, because even if you don't know why they are there, most likely the next 2-3 months we'll see a melt up after that happening. And explanations will be made up on the way. Along this last chart I have here is, or not last chart, this chart I have here is actually putting in the nice recession bars again. According to unemployment rising, we are actually at the point just before the recession hits us right in the face. And then suddenly all these things start mattering again. But I'm with you at the moment. It's a market that reminds me of the 99 heydays, where people like my good self were sitting in front of the screen and thought, this is complete bullshit what's happening here. Yeah, I was too early, but too early is also being wrong.
It's wrong, absolutely right. But again, what you didn't have in 99, actually you had a budget surplus, I think, in 1999 in America.
Yep.
You were in a totally different situation than you are today. And 99 didn't explode until 2000, March 2000, I think it was. And then the market started to come down, or 2001.
Let me show you something we did. Sorry, but... Yeah. Then you can continue. What we did have in 99 is this last chart I've taken from Game of Thrones. Its source is Thomson Reuters. and it shows corporate insider selling. We did have that in
Very
99.
interesting.
Yeah.
Very interesting. This is, so, you asked me, what do I think? I'm a fan of 5.5 to 6,000 S&P. You also said to me, so, effectively, are you buying now? No, I'm not buying now. I think the market does need to come down first. I think it's too hot. All of the people who were short 2023, they've got no excuse. They listened to a lot of these idiots that were sort of snake oil salesmen selling this recession nonsense. They're going to get caught. Market's going to come down. They're going to be, whether they can afford to hold it or not. But the economy, in my view, in America will avoid recession for one simple reason, that both parties, Republicans and Democrats, will not force a recession because they will continue to spend money on their economy. And it just goes to show when the times get tough, they say, you know what, we don't need to send money to Ukraine. We use it over here. So they have their priority. We don't need to send our gas to the Europeans. We use it over here. So they are very, very good at keeping their economy together. They have to. We talked about this in video 1. They have to keep this thing together. They cannot afford this thing to implode purely and simply because of the tax receipt situation. So the economy does have to keep moving. They have this still one chance where they can spend as much as they can without being punished by any overseas investor. There is no bond vigilante out there anymore. They've gone. They went to UK and hit the gilt market. There is no American bond vigilante. They've retired, right? Or they've lost their money. And the bottom line is that the US can continue and will continue to spend money to keep their economy going. At one point, it will be each dollar. At the moment, according to some economists, each dollar is driving something like 30 cents of growth. So it used to drive 70 cents of growth many, many years ago. Now it's only driving 30 cents of growth. So how much debt do they have to keep spending in order to sort of keep the economy going? The marginal value of that increase in the deficit is becoming worth a lot less than it used to in the past. So, the time is running out, but they're using that time like crazy at the moment. But I think short term, I'm still negative. Sorry.
Nic, do we still have an implicit Fed put out there? Because if I look at all these things, we've now said interest rates don't matter. Unemployment doesn't matter. Corporate insider selling, I don't give a shit. Doesn't matter anymore. Yeah? So why keep markets rising? Because we all know the Fed has become very good. If something unforeseen happens, the event, they will be there opening the siphons, and then you just have to wait. Where's the temporary low and load up till kingdom comes?
Yeah, it's very interesting, and yes, the Fed have been increasing liquidity. They haven't been decreasing liquidity. So what they take from over here, they give somewhere else. They've been having this BTFP program. They do this, they do that. Net. They're making sure that there is a minimum level of bank reserves in the system. And whilst the government continues to spend, that doesn't take liquidity away. Because they spend it into the economy. So what goes out comes back in again. And they are continuing to do this. I just think the market's a little bit too hot. That's all.
Yeah.
But I think the economy is okay.
Some more meme slides. I found this one. I don't know whether it's true.
Frightening,
but
it's true.
I would assume otherwise they would have been sued already. Just showing that with a big caveat. Tesla sold just one EV in South Korea in entire January. Customers worry about safety and charging. So, okay, fine. If you're a corporate insider at Tesla and you see your own sales figures, what would you do? Especially if you have to pay some lawyers in Delaware now, 15 billion, plus have to hand over your according to the judge, ill-gotten gains. Obviously, I'm talking about Elon Musk's lost lawsuit about his bonus or his benefits he got, this 50 billion pay package.
He didn't get 50 billion, did he? I think they declined his 50 billion. He doesn't need it. But the point being that 50 billion bonus was what he paid for Twitter, I think. But this article, if true, you should send that, or we're not going to do it, but this should be around every German car company's boardroom to scare the living daylights out of these people. And somebody should say, what the hell have we done?
Oh,
Right?
they are already scared shitless, Nick. If you listen to BMW or to Volkswagen, there is a disaster not in the waiting, in the making. It is already.
Absolutely. I mean, these guys are falling for it.
And that's the other chart. Obviously, I've already talked about this MarketWatch article. NVIDIA is now worth as much as the entire Chinese stock market. Yeah. Reminds us of the golden days when the palace of the Japanese Tenno was worth as much as the whole real estate in California. Huh?
Absolutely. That lasted a year or so. So, you know, you have to buy some long dated puts. But the point being, the point being that there are these anomalies around the world. And, you know, these anomalies are caused by emotion. So the people are emotionally selling the Chinese market. They're emotionally buying NVIDIA. And that's the effect you get. You get these anomalies. And this money is going to be made where you sort of won at the right point, play against it.
Yep. So last chart, or almost last chart, penultimate chart, extreme greed barometer by CNN. We are there. We are in extreme greed territory. People think, yes, we have a soft landing. Shit, we've seen new all-time highs. I have to go long. I wasn't in the market. I was short the market in 23. What the hell? My investors are going to kill me if I'm not being invested. Absolutely. And that's what we are seeing here at the moment. It's quite interesting. If you looked at PayPal last week, they came out with earnings. Didn't look as good to the investor on the street. Market went down by 12%. The next day we recovered by 5.5%. That is not normal moves we can see here. Usually if a company gets taken to the cleaners, they don't make a recovery of half the amount they've lost in an after earnings trade. It's absolutely an indication for in which state of the markets we are in, because what people are seeing, yes, some guys will have closed their shorts. The other guys thought, ooh, cheap calls. Let's go and load up on PayPal, because if the soft landing happens, that is one of the stocks that hasn't performed yet. So yeah, that's what all the, I don't want to call them amateurs, but that's what everybody says. Oh yeah, I have to buy the dips. Let's go in and see what hasn't performed yet. Oh, that's PayPal. Yeah, is it a good company? I don't know. I use it. You use it. But seeing this recovery after an 11-12% downturn after earnings, very peculiar. Let's put it that way.
Okay. I mean, I don't follow these stocks because I just can't follow everything. But when PayPal came up in the news, I thought, I better have a look at this thing. No idea about what's going on at PayPal. And I noticed that actually PayPal was trading at something like $300 in 2021. I mean, did they do something with their stock, or did the market just fall? So if the market just fell and they didn't do anything with their share numbers or anything like this, I mean, the excitement of PayPal moving from 55 to 65, or, you know, I don't care, because, you know, there must have been some fundamental reason for this thing to fall in the last 2 years, you know, so substantially. And whether that's the crypto thing about, you know, people changing their payment habits, and there are better tools and cheaper tools to use, and it's the whole business model of PayPal. But you know, whether it moves from 55 to 65, frankly, I think I know that's a dream for many people, but it's not really a focus for me. I'm much more interested to understand what's happening to the whole business model of this company.
I'm with you. It's actually not a verdict on PayPal. I don't know too little about it, but I was actually just pointing out the extreme market movements we see here at the moment. You know, that is not something which is substantial in a sound bull market or an up market. Yeah, you see these drops by 10-12%. You see an up move next day by another 6% up again. It's weird.
But the point I wanted to make was the news on beaten up stuff seems to be sort of very, very high near the low. So everyone's talking about China near the low. Where were you when this thing was 3 times higher? And same thing with PayPal when it was at $300. So it's kind of saying to you that when the psychological thing, when people say kind of it's the end of the world for PayPal as we know it, those are usually sort of psychologically, sort of from an Elliott wave psychology thing, good points to think about some kind of turnaround for this thing, as it is or as it might be for China, in my view. So that's why I'm kind of staring at this thing every now and then, because I'm thinking, is this a turnaround or is it dead?
Let's close on the one thing which seemed to have worked over the last of 23. Just look at the seasonal charts and see what happened in the months that were in front of us or ahead of us. And what we've seen since the pandemic, apparently you don't want to be long from the end of February on, right? Because
I think Q1 is always a bad time. It's not on a seasonal thing. Murap would know all of this stuff.
It's maybe when Skynet is planning the next disaster about to happen, yeah? The event. We don't know what it could be, but let me close on the most fantastic meme. If everything goes to shit and you haven't been hedged or had the appropriate strategies on, the best way to die ever, made me chuckle. Clint Eastwood shooting you in the face while Morgan Freeman narrates it. So that's how a real warrior should go out of the market. However, always bringing it back to the bloody options, we proposed a nice options trade when we had this breakout on the S&P. I said, I don't know which direction we might go, to the upside, we might go to the downside. Volatility is cheap. This thing is already generating money. Yeah, so the question is now already, where do I take my first scalping off the table to lock it in and just have a further look at the market? And I think on this note, yes, it is exciting what's happening at the moment. It's all a bit weird. Just have a look at how markets are actually moving. This is not looking like a market that is at the early stages of a bull market. This is a market which is driven clearly by, well, by what you just said. Government can spend money. Government can pump money into the market. United States, they are the rulers of their own currency. It's their currency. It's our problem. Let's see how long the party goes. Obviously I'm a big fan of wanting to hit the top or the bottom. We're not going to do that. It's not going to happen.
But I've got that. So I still sort of try to sort of do this thing, and I do that because I'm aggressive. But when I start to lose money, what I normally do is go and buy crypto, and just to cover my losses. And it kind of works so far. But
I think it's a privilege of old age, Nick. We are allowed to do that, right? Even if we tell our students, don't do it, don't even try it. That's what we are busy the whole day with. However, we're old enough to say, fine, if the market eventually turns and everybody, the narrative has completely changed, there's still enough time to benefit on the downside.
Indeed, absolutely. And that's the point. And, I've created sort of signals to avoid me having emotion, right? Just watch the signals. And I think 4,800 is the level where you can start to say, okay, the bull market is over for now. Something
we had that in autumn, winter last year, and you were profusely sweating because we didn't hit it by a point or something like that.
3 ticks away from hit my 3 ticks, and that was the mother of all lows, 4,100 on the S&P. And what a wonderful thing that was. 4,809, I think it is, if I read it correctly. It could go down there, and it that's your support on the long-term picture, and it's also the point where this thing can break down as well. Anyway, so you're supposed to stay long whilst these sort of signals are still bullish, but emotional people like you and me will still try and get that.
It's one of the things I didn't mention today because I simply forgot it. The concentration risk we have at the moment is just as high as it was in 1999. We have a couple of stocks are responsible for everything. Yeah. We saw that when even we were young in the 80s in Japan, where you had a huge concentration risk. They had a couple of stocks that were doing fantastically well, and everybody was thinking, oh, it can't get worse, or it never can go bad again. And just keep your eyes open, use hedges, use diversification in this whole market, and then things will turn out be all right. But I think we are now coming to an inflection point where we have to be careful what's going on. So,
but the longer term picture is still positive. AI is not just a kind of a fake thing. It's a big thing. People are using it. It will allow companies to reduce their cost base. That means profit margins going to improve. It will be good for the economy longer term. So still the long-term picture is bullish. But when you see euphoria, you have to sort of think that, that's what crypto did, the exponential moves, no fool by it, sort of taking some profits. And I will be running down my equity holdings into this uptick. Just don't care, I'll see.
It's funny that you say that. That is one of the little bits of news you hear from professional money managers who are actually using these new all-time highs to not getting out of their investments, but trimming them. Clearly trimming.
But here, go and have a look at some of your equities. They haven't gone up that much, right? Yeah. So, that's the thing and that's where it's whole concentration thing. Unless you've had Meta and, NVIDIA and all of this stuff, then go and have a look at your equity portfolio and say, oh, actually, I had a few small caps, had a few sort of meme stocks, had a few of this, few of that. And then you realize, actually, take a profit on selling this thing up there. It's not that much.
Yeah.
But I know they'll go down as soon as the other things go down. So you might as well let loose.
Yeah. I think we have to look at the technicals coming in sooner or later. The fear and greed index is not something I want to go long on at the moment. And as long as volatility stays at relatively cheap levels, there's always something you can do.
Absolutely.
In that sense, Nic, any last words after we had already last words and last words and last words?
We've had too many last words. Have a nice remaining weekend.
Then I say thank you very much for being our guest today. And hopefully we'll see you again next week with all the new exciting things coming up in the market, and Nic and I shall discuss it. Have a wonderful week ahead of you. Bye-bye.
See you. Bye-bye.